Hi, this is me. So, but to make this session more smooth, I would really want to switch off my webcam because it will take out a bit more of the bandwidth. All right. So, if you will allow me, just want to switch my webcam off. Okay. Awesome. Now, if you can see my screen, let's get started. Okay. Now today, I'm very thankful that I was invited by Mastery Asia to launch this program, how to start investing in stock market. And for those of you who come in today, we only have 100 seats, so I want to congratulate you for being here today. Now, allow me to introduce myself. My name is Shin, but my surname is Chu. Okay, so I've been investing in the market for the past 9 years. Now, I may look really young because I started really young. I started learning about investing when I was 18 years old. When I was 19 years old, I purchased my first share, and subsequently, I started a club in so I lead a financial club in university when I started teaching my juniors how to trade the stock market when I was in second year, and subsequently when I graduate, I do it professionally until today. Now, this is me. I have about 9 years experience. I have traded a couple of stuff like stocks market, exchange traded funds, forex, as well as options and CDF. Now I have some experience in the local market and also in foreign market like US and Hong Kong. So this is a little bit about myself. And when I was 20 over years old, I went on to BFM 89.9 to share my views as a young investor. And subsequently, I was interviewed a couple more times on the media to share about my entrepreneurship journey, to share about money management, to share about investing. All right, so these here are some of my media exposure when I was interviewed to talk about investment, talk about money management. And I also went to, I also very fortunate to represent Malaysia to attend a financial education conference in New York. And this is me addressing the crowd in Manhattan, New York. And when I was there, actually I went to New York 3 times. When the second time I was there, I actually visited this place called Wall Street. And this is the most famous bull in Wall Street, and this really symbolizes that, when the traders and the fund managers see this bull, they would really be encouraged that the market will be good, and then their assets will appreciate. Yeah, so, and subsequently when I was in the mid-20s, I was engaged by a number of financial institutions such as the Bursa Malaysia, the stock exchange, and investment banks to help them run stock investment program. So I've been doing this for the past 3 to 4 years to help the financial institutions to run programs, to get people to start investing, to teach them some skills in investing. And at one point, I was acknowledged by the President Obama as a young leader in financial education. So that's a little bit about my background. If you want to connect with me and hear me more, you can go to my Facebook page, and that's how you can connect with me and get some ideas of the market from me. Now, so today, in a short 1.5 hours, I'm going to cover the following topics. Why invest? Why stock investment? And ultimately, the principles to value investment. Okay, so we are going to cover these 3, but the main topic today is on the third topic, principles to value investing. And the fact that you show up today means that you are already responsible. You feel responsible for your financial well-being. You feel that you want to take charge of your financial wealth, and today you're here and you take actions to sign up for this program. I really want to thank you for that. Now, before I proceed further, I just want to do a disclaimer. And stock investment involves substantial risk of loss and is not suitable for every investor. And whatever we share today or investment strategy we cover today is actually used at your own risk. And the speaker, which is me, is not responsible for any losses because I never hold your hands to do any buy or sell for any security. So today we are going to explore it as from a case study purpose. Okay, if you decide to buy any stock, and that you do it at your own risk. Is that okay? All right, awesome. So let's begin. So why do we need to invest? Now, firstly is, do you think the salaries that we make every day is enough? when the cost of living is getting higher and higher. Okay, we have a lot of expenses like education, car installment, the PTN loan, and marriage, and family. Sometimes when we work so hard, we go for vacation, and these are the things that we need to pay. But we see that inflation is going higher and higher, faster than our salary climb. Do you agree? And if you look at the effect of inflation, we are aware that nowadays 50 ringgit can no longer buy so much stuff. Now, if you don't learn about money, guess 20 years later you'll be better or you'll be the same. The answer is, if you don't learn about money, 20 years later you'll be worse. You'll be worse than today because of inflation. And for those of you who are savers, you never invest, I'm going to suggest to you that savers in today's economy are losers, because the central banks around the world are so busy printing money. They printed tons of money everywhere, from America to Europe to Japan to Sweden, and almost half of the developed countries in the world printed money. They do QE. So when they printed so much money, the more money you save, the more you are losing out, because your money will become less valuable as every day passes. Okay, so if you just merely save, you don't invest, chances are you will never catch up. You'll be a loser, and you will never catch up with how fast inflation can go. So I suggest you to look into investment. And for those of you who want to achieve your financial success, chances are you probably want to have your lifestyle freedom. You want to be able to do anything you like, at any time you like, at any place you like, with whoever you like, and as many times as you like. So this is what financial freedom means to you. You want to travel around the world, and you want to live in some of the best house in town, and ultimately you want to achieve financial freedom. You want to be able to dine in the best restaurant without looking at the price tag. We have a care, of course. So this is what ultimately you want to achieve. And from where you are now to where you want to be, usually there are two ways. Okay, the first way is through business. But business may not be for everybody, because business is tough, and today's very competitive world, in a globalized world, starting a business is tough, and costs is everywhere. Okay, GST, accounting costs, fixed cost is very high. So business may not be for everybody if you're not ready. So the second way to reach your goal is through investment. That's why I want to suggest to you that investment is really important. It can take you from where you are now to where you want to be in the future, to empower you, to enable you to achieve financial success, to enable you to achieve financial freedom, to be able to travel around the world, to have the lifestyle freedom, mobility freedom, time freedom, and contribution freedom. That's what investment can propel you forward. And maybe you're already convinced you need to go investment, that's why you sign up today. But what to invest? There are a lot of things in the market, and we have currency, we have shares, we have bonds, we have unit trusts, we have annuities, property. There's a lot of things to invest. So if you ask me which one is good for you, I couldn't answer that, because when you want to start investment, you need to look at three things. And these are the three criteria. The first criteria is you need to know what is your amount of capital. Because if your amount of capital is very low, some of the asset classes may not be suitable for you. For example, property. Okay. Secondly is second criteria you need to look at is your risk preference. Some asset class is more risky than the other. Some asset class is really less risk, like risk-free, like fixed deposit. So if you are the type of risk taker, your risk preference is very high, you can take a lot of risk, then probably putting your money in bonds, in fixed deposit may not be right for you. But if your risk preference is really high, it's very low, and when you cannot take a lot of risk, then probably you need to consider bonds. And third criteria is the time horizon. So some of you here want to invest for half a year. Some of you here want to invest for 10 years. Some of you here want to invest for 1 year. So if you want to invest for a very short term, like half a year, maybe some of the asset class may not be suitable for you. For example, unit trust. So these are criteria you need to consider: the amount of capital, the risk preference, and your time horizon. So, but today I want to suggest to you that we need to look at this investment as a class called stock market. Okay. Now, if you have purchased 1,000 Public Bank shares in 1967 and have held it over a period of 49 years, your initial investment will have grown to 2.9 million at the end of 2016, and you have received 1.2 million worth of dividend. So this is how much it can achieve. Isn't that amazing? Now in 1967, the minimum requirement for stock is 1 lot, and 1 lot is equal to 1,000 shares. In 1967, if you just bought 1 lot and 1 lot only, today you are a millionaire. But probably some of you are thinking, 1967, maybe I wasn't even born. Okay, of course I miss Public Bank. But the truth is, there are a lot of Public Bank kind of cases here available in today's market, whether in the Bursa market, whether in New York Stock Exchange, in Hong Kong Stock Exchange, Frankfurt, London, Australia. So there are new companies that are being listed every day, and they have great potential. Now, do you think that when Public Bank went IPO in 1967, Public Bank was very known? Absolutely not. Tan Sri Tehongpel just left Maybank as a senior banker and started this bank called Public Bank, which not a lot of people know. At that time, if you want to drive around and look for Public Bank branches, maybe you need to drive 200 kilometers before you find one branch. So at that time, it wasn't very known. But if you believe in Mr. Tay's leadership, at that time he wasn't even Tan Sri yet. So if you believe in Mr. Tay's leadership, you believe in his management expertise, you believe in his banking experience and his capability to bring Public Bank to a greater height, you invest 1 lot only, just minimum 1 lot, today you are a millionaire. And if at that time you not only invest in Public Bank, you invest in Simon Darby, IOI, or Maybank, or Genting, YTL, today you are definitely multi-millionaire. So this is what compound interest can help you. Compound interest is the 8th wonder of the world. Those who really understand it can really take it to your greatest advantage. So that's why I want to encourage you to start investing. Now, before we go into stock investment, of course, the most important definition is we must understand what are stocks. So what are stocks to you? Now let me define it properly for you. Stocks means an ownership to a company. Stocks means an ownership to a business. Okay, so by investing in stocks, you are literally owning or buying a piece of ownership of a listed company. So you must, when it comes to investment, you must know that you're buying a business, you're buying a company. When you do trading, you may not need to know that you are buying a company. Trading basically it's just a price that concerns you. But in investment, if you're going to hold it over a period of time, you must know what the business is doing. So today our topic is on value investing. So that's why you need to understand the definition of stocks. So why stock investment over other asset class? Now, firstly, is stock investment require low capital. Okay, guess how much you need to get started in stock investment? Now the point is, as long as you can afford to drink Starbucks, you can afford to eat McDonald's, you can get started in stock investment. It is so cheap. Of course, if your your stake is very low, then your return may not be so high. Now, because as low as if you buy a 10-cent stock, 1 lot now is equal to 100 shares. So you buy a 10-cent stock, it will only cost you 10 ringgit plus, the brokerage fee and stuff like that is 20 or 30 ringgit. So nowadays, 1 cup of Starbucks already 20 ringgit. So As long as you can afford to drink Starbucks, you can get started in stock market. Okay, but it is not so easy about investing in Tencent, so it's kind of risky. Okay, but anyway, if you don't mind losing 10 to 20 ringgit, you only need two things. The first thing you need is a device. Whether it's iPad, iPhone, or desktop, laptop, you need a device. And secondly, you need internet connectivity. Only when you have device and the internet connectivity, you can make money anywhere in the world. And this is my favorite part because it gives you mobility freedom. You can make money when you are traveling, when you are in Egypt, when you maybe you are riding a camel, you are seeing the pyramid, and you can still buy and sell stocks and make money. Or you can go to Sydney. Before you climb the Sydney Bridge, you place some order. After you finish climbing the Sydney Bridge, you come down, you make some money already. Okay. Or you can be sipping a cup of coffee during rainy days in the downtown Shanghai in Starbucks, and you open your laptop and then you play some trades and you're observing the stock market movement, and you're researching the company that you want to invest in, and through that you can make money. Or you can be in New York City. Okay, you can see the bustle and hustle of the city. You can see the yellow cab, and then you can slowly research company, invest in the company, and make money. So stock investment gives you mobility freedom. You can be anywhere in the world, anytime, and you still can make money. Okay, as long as the stock market open for you. Third is no hassle. Okay, in stock investment, no hassle. Okay, unlike property investment, you need to call the tenants to ask them to pay money, or maybe your tenants call you 3 o'clock in the morning and ask you to wake up to fix some of the problem for them. Maybe the neighbor are quarreling, maybe the lighting don't work, the aircon leaks and stuff like that, and it's cause a hassle. In stock market, no hassle, because no listed company chairman will call you 3 o'clock in the morning and ask to pay you dividend. All right, so very little hassle. Low transaction cost. The cost of acquiring stocks is really low, and unlike property investment, the cost of agent already 2 to 3%. Stamp duty plus a loan agreement fee. SPA. Your insurance easily 5 to 6 figure. Okay, in stock investment, it's very low cost. When the cost of acquiring the asset is very low. You only pay brokerage fee 0.1%, stamp duty 0.1%, clearing fee 0.03% to Bursa Malaysia, and ultimately a bit of GST. Okay, so 6% of clearing fee and brokerage fee. So altogether, you add up, it's not even 0.5%. So it's so cheap. But of course, the brokerage fee I'm sharing now today is for Bursa market. So if you want to talk about New York Stock Exchange, the clearing fee is even lower, okay, because the liquidity and volume is so huge. So fifth is high liquidity. Stock investment give you high liquidity because all buyer and seller are gather one place when you want to buy and want to sell very fast. Okay, and you want to take back your money also very fast. Six is give you dividend. Okay, it's passive income. Okay, I also love passive income. That's why I invest in stock market. 7 is capital gains. When you buy low and sell high, you profit from the difference between your buy price and sell price. You make capital gain. And good investor can make more than 20% per year. Okay, capital gain. And if you just invest in funds, probably you're making 5 to 10% a year. Some good fund maybe give you 12 to 15%. So, but if you invest on your own, you don't have to pay the sales charge, you don't have to pay the annual management fee, your capital gain could be higher. And lastly, you have voting rights. Okay, you have ownership, you have voting rights in the AGM. So you attend AGM, and then they give you voting rights. So these are the perks of being a stock investor. And if you look at S&P 500 historical charts, okay, this is the world largest stock market. So the question now is, can stock market bring you money or not? Okay, now if you look at the world biggest stock market, S&P 500, from the day it was started in 1950 until today, 2017, the stock market has grown from until 2,400 points. The Fortune 500 companies, the index is at 2,400 points, which is a historical high. So if we do it at a annualized return, the compounded annual growth rate is 7.7%. So if you don't do anything, okay, you just invest in the stock market, you just close your eyes, put some money in the S&P 500 through maybe exchange traded fund. So if you buy the S&P 500 exchange traded fund, the index, on average, your growth is 7.72% every year. Okay, so this is purely buy and hold strategy. A pure buy and hold strategy on every year, historical data shows that you can make 7.72% every year. So this is how incredible it is. Okay, just buy and hold. But if you want to improve your return, you hate the 3% return that fixed deposit give you, and you want to improve your return. You also don't like 7%. You want it more. You do a bit more active investing by picking up the skills in investing, by understanding how to dissect company financial statements, by understanding how to see the price, how to read income statement, how to study the management, how to see the business model, how to see which company has potential. You acquire the skill, you invest in it, you pick up a good asset, your return could be more than 15% per annum. Now, if you want me to set a benchmark, I would say that all of you should at least target 15%. Okay, you have to target about 15%. That's my benchmark as being successful in investment. And the chart has not factored in any dividend yield. Okay, if you include dividend yield, passively, you can make more than 7% per annum. Okay, yeah, I forgot this point. So now we are talking about, we talk so much about stocks, why stock investment, why you need to invest, and compared to other, one more point I forgot to mention is compared to other asset class, no asset class can appreciate about more than 7.7% per annum compared to stock market. Okay, stock market is even better than the property market in such a way that the compounded annual growth rate is higher compared to the property as an asset class. So how to evaluate stock? Now, in general, there are two big schools of thoughts. Okay, how to evaluate? First school of thought is fundamental analysis. Okay, where you look at the company statements, you look at the company financial statement, the balance sheet, the income statement, and the cash flow statement, and the business model and stuff like that, and you decide whether this is a good company to buy or not. Second is technical analysis. Now, technical analysis is when you learn about the charts, you learn about how you learn about the price, you learn about the volume, you learn about the support resistance, and then you decide when is the best time to buy and sell. So some people use a combination of both. While some people, they are pure fundamentalists. Some people, they are pure chartists. They only look at charts. So those people who are pure chartists, they are traders. Okay, they look at price, they see which one got momentum, they buy in, buy out very fast. Some people who are pure investors, they look at the fundamentals part of the business. So they look at the profitability, okay, their market cap, the operating statistic. So these are something they look at. And by pure fundamentalists, they look at how much it can grow, and they don't care about the charts at all. If they find that the intrinsic value is higher than the price, that means the price is below what the company is worth, they buy into the company. So this is what we call pure fundamentalists. Okay, but there are people who are combination of both. For example, I am a combination of both. So as I told you earlier, I trade a number of, I do number of investments, so I have a good understanding about different instruments in the market. So when I go for leverage product, I will use technical analysis and to help me for quick win. Okay, but I have majority of my portfolio is in investment where I let time to help compound my money. So I'm a hybrid of both. So when it comes to investment, I will use fundamental analysis to help me pick the right asset, the right stocks to buy, and then I use technical analysis to help me to go in to see when is the buy and sell price. So for me, I'm a hybrid between FA and TA. Okay, but for beginners, okay, if you are new to stock market, I would suggest that you go for fundamental analysis first, being an investor first, because being a trader carries more risk, which I will cover shortly. Now, so what's the difference between trading and investing? I'm sure you've heard of these terms, okay, trading and investing. Now, trading is generally very short term. Investing is generally very long term. So in a relationship context, investing is like a marriage. Okay, you get married to that person until death do you both apart. So if you invest in good companies, it's like you get married to the company, and when it's for very long term. So if you invest in good company, usually when you die, the company is still around. Okay, if you invest in really great company, maybe when your grandson died, the company is still around. So this is investment. They do it for a very long period of time and collect dividend along the way. Now, secondly is trading. Now, trading is not like investment. Trading is unlike investing. Trading is very short term. So it's not a marriage. So in trading, it is more like a one-night stand. Okay, so you go in and you go out very fast. Okay, sometimes even forgot which stock you start with. So these are trading. You look at the momentum, you see which one momentum comes already, you go in and buy and intraday, and then by 5 o'clock before market close, you sell. So these are trading. So, and some people do intraday trading. Okay, they trade on margin account. Today they place order, 2 days later they will close the order. Okay, so these are traders, or they trade futures, they trade options, they trade derivatives, or they trade forex. So these are different approach to making money in the stock market. However, today our topic is on investment. Now, for me, I don't encourage people, especially young and new people, to investment, to go into stock market, to go to trading, because trading in general carry more risk unless you're professionally trained. Now, trading is very short term, and you try to price in for a small opportunity. You want to price in, and most of the times you might get it wrong. And 90% of traders in the market lose money because they don't. Firstly, they don't know what they do. Secondly, they are beaten by their psychology. Thirdly, is they don't have a proper money management strategy, and lastly, they don't have a good trading strategy. So 90% of people lose money in trading. And if you talk about trading, maybe you need to learn a lot about indicators, not a lot of charting software, and then you need to. It is quite time consuming for trading because you need to stick your eyes to the market and to see the minute movement and try to profit from that. Okay, for those of you who have a full-time job, maybe trading the stock market is not so suitable for you because it's it is nearly impossible for you to do trading when you're working, right? So today we talk about investing. Investing is safer and generally in general can deliver a more consistent return if you do it right. And if you invest in right company, usually you won't. It is if you do a right approach, you can make money and you can hardly lose money. Okay, if you do it right. Now today I want to explore the topic of value investing. Okay, now maybe you have heard of value investing before, but you don't know what. So today we're going to talk about value investing. So what do you understand about value investing? Now, value investing means that you buy into a stocks, a good company at a really attractive price. Okay, to put it short, is a skill, it's an approach to teach you how to buy one ringgit stock for 50 cents. So To be short, it's a skill to teach you how to buy a 1 ringgit company for 50 cents. So cheap. So this is value investing, teaching you how to uncover undervalued company and buy it when it is cheap. Now, can value investing help you make money? Definitely. Okay, here are some of the world's top value investors. Okay, Warren Buffett worth 78 billion. Had Warren Buffett not donated his wealth to Gates Foundation, today he's easily worth, could be the world's richest man. Christopher Brown, Peter Lynch, Seth Klarman. So these are the people who have made it big in value investing. Okay, they employ a value investment approach to make money and to make money in the stock market and help to compound their wealth. So it's no question that value investment can make you money or not. It definitely can. Okay, in fact, the world's most successful people are great investors. So we need to first define what is investment. Okay, for us to talk about value investing, we need to first define what is investment. Now, like all guru, Warren Buffett also has a guru. Okay, the world's greatest investor, Warren Buffett, his guru, he learned from somebody from Columbia Business School, and this guy inspired him, and his name is Benjamin Graham. Okay, so Benjamin Graham gives the best definition of investment that I can think of. Okay, so for you, maybe investment is something that helps you make money. To him, it is not. He defines investment as, let me read it out for you. An investment operation is one which, upon thorough analysis, promises safety of principal and an adequate return. Operations not meeting these requirements are speculative. Okay, so there are 3 keywords here. The first keyword is thorough analysis. So as long as you don't do thorough analysis, you are not investing, you are being speculative. As long as any of those 3 criteria is not met, you are being speculative. So thorough analysis means that when it comes to investment, you have to really study the company well. And the second criteria, the second keyword is a safety of principle. Okay, the investment you invest in must give you a safety of principle. Okay, this is I think to Warren Buffett this is very important, because Warren Buffett has 2 rules in investing. First is never lose the money. Secondly is don't forget the first rule. So Warren Buffett is a capital preservationist. Okay, he hates losing money. He hates losing his capital. So, but does that mean that he never lose money before? Absolutely not. He do make some bad investment. But the key is when you invest, you have a certain confidence that you have a safety of principle there. And the third keyword is adequate return. Okay, it must give you a reasonable return. If it gives you too low return, then don't invest in it. Okay, now, so this is investment. So let's compare JGPTR. Okay, now when you invest in JGPTR, do you do thorough analysis? Does the scheme give you a safety of principle? Do they promise you an adequate return? Actually, no, they give you extraordinary return, which is, very skeptical. So anyway, investing in this kind of scheme is not investing. Right? This is just gambling. Okay, but today we are going to talk about value investment. So we must bear in mind these 3 criteria: thorough analysis, safety of principle, and adequate return. Now, to encapsulate value investing in one diagram, this is it. Okay, we want to buy a company when the value keeps going up and the price keeps going down. And when there is a divergence, we buy into that. So isn't that amazing when you can buy a good company whose value is going higher and higher at a really cheap and low price? If you can manage to do that, for example, the company is worth, let's say the price per share, the company is worth 10 ringgit, but it's only selling at 5 ringgit. When you buy into the company, do you think you have a certain confidence that you can make money? Absolutely. So value investing is what is, I wouldn't say it's the safest approach to investing. As long as you don't lose money and it can give you an adequate return through value investing, we can target maybe 15% per year. Okay, if you're better, you pick the right asset class which carry a bit of momentum, you can make 20 to 30% return a year for your portfolio. So this would be would that be a good enough return for everyone of you here? So value investment is a safe way, and it can help you to make money over a period of a long time. So the question now is it easy to find company which fit this diagram? Maybe not, especially now. Maybe if you look through maybe 20 companies or 30 companies, you can find one. Now nowadays, when KLCI is 1,770 points, it is not so easy. Not only the Bursa Malaysia market, as I told you, I have exposure in different markets. The S&P 500 is at 2,400 points, it has historical high. Nasdaq is also at historical high. Dow Jones, the Dow 30 stocks, is also at historical high at 21,000 points. Hang Seng is also very high. So FTSE is also very high. So in the major stock markets across the world, a lot of companies are trading at really high price now. So it becomes not so easy to find a company whose value is high but the price is low. That's why it is important that for you to learn, and you can pick up this skill and you understand which sector to go to, and maybe at that sector it is easier for you to find a stock. Okay, now if you want to look at blue chip, it's really hard, okay, to find value stocks. So blue chip is tougher now. If you want to look at some small cap, mid cap stocks, you may be able to find. Okay, so that's why you need to educate yourself. If you just buy Maybank, Public Bank, CMB Bank, IOI, Genting, probably you're not getting it at a good price. So good company may not necessarily be a good investment, because good companies could be overvalued, or could be fully valued, or could be relatively more costly compared to their peers. So that's why you need to learn a skill. So let's explore what is characteristic of value investor. Firstly, they select stocks based on value. They search for companies whose price is below their value. Okay, now to them, price is never the first priority. The priority is value. If value is right, they check whether the price is good or not, is attractive or not. The third is they focus on the company and its business. Now in the market, there are actually two markets. The first market is a real market. The real market is where value investors focus on. They focus at studying the real business, the real market. The second market is the stock market. The stock market is where the traders spend time on. They spend time in studying the price. They spend time in studying the momentum. They spend time in studying the volume, the support resistance, and they are very concerned with the day-to-day price fluctuation. Now for investors, they don't care about the price fluctuation on a day-to-day basis, but maybe they check the price periodically, maybe a quarter. When the quarter result come up, they check the price on quarterly basis. So they are not deeply concerned about the day-to-day price fluctuation. They focus on the real market, which is the business. If they invest in Old Town White Coffee, they want to drive past the Old Town White Coffee and see whether they got people eating inside or not. If they invest in Starbucks, they want to see whether Starbucks outlet got people or not. If they invest in McDonald's, they want to see people really drive in a McDonald's or not. So they focus on the real business investor. Now, value investors also believe that markets are inefficient. Okay. Now, because if markets are efficient, all stocks are fully valued all the time and fairly valued all the time. Because markets are inefficient, because there are emotions in the market, where some companies don't trade logically, they trade emotionally. That's where value investors find opportunities. They go in, they buy at a low price, and they sell at a high price. So like what Warren Buffett says, they buy when people are fearful and sell when people are greedy. So that's why they believe that markets are never efficient. So what you need to become a value investor? Firstly is you need a simple math. So if you don't need to have an accounting degree. Some of you maybe have a concern. Okay, I don't have an accounting degree. I don't know about accounting. How can me? The answer is, of course you don't need that. If you need the accounting degree is only to teach you on how to prepare accounting statement. Okay, if you ask accountant where do they put their money, maybe senior accountant will most likely tell you I put the money in the bank, because they think that they cook the book, accountant cook the book, they may not be able to get the right representation of the company's real financial positions. So accountants by nature is very prudent. They don't really every cent also count. So they're very prudent. So they cannot take too much risk. Okay, but maybe nowadays accountants are more enlightened. So if you're accountants, you must be the enlightened one. All right. So so you don't need an accounting degree, because as an investor, you don't need to learn how to prepare accounting statement. So what you need to do is you need to learn how to interpret financial statements. Okay, interpret accounting statements. So what you need to have, firstly, is simple math. So long that you know how to do plus, minus, multiply, and divide, you fulfill the first requirement. Now, if you don't know how to do this simple math, then forget about it. You can't be you can't be an investor. All right. So secondly, you need to have common sense. So do you have common sense? I bet you do. So that qualifies you to become an investor. Third is basic fundamental analysis knowledge. This is where we will share with you what are the ratios to look at, and what are operating statistics to look at. Okay, so only you need these three things, and lastly you need one more thing. You need to have time. Okay, now value investor believe that time is their friend. Okay, time is our friend. Okay, in trading you think that trend is your friend. So when it comes to investment, time is your friend. Now, investing is you let time to compound your money. When it comes to trading, is you try to time your money and flip as fast as you can. Of course, carries high risk. So value investors need to be patient. Okay, they are very patient and they are very disciplined. Okay, and that's why they can they're very patient. They can live quite long. So time is always your friend. They believe that over time, the true value of a business will be reflected in the share price. Okay, in a shorter period, price will fluctuate. Okay, emotionally, but over a period of time, a piece of business, the value will be reflected in the share price. So if a good company, the share price will go out eventually. If you invest in bad company, they believe that the bad company share price will drop eventually. So time is a best friend. Okay, when it comes to investment, just let time to compound your money. Okay, you need to have time. Now, there are 3 steps in value investing. Okay, today I've just shared with you the introductory. So the first step to value investing is not to study the price. Okay, as I said earlier, investors study the price last. The first step is to study the business model. The business model. And business model is very important. The second step is to study the management. Now, if the business model is not good, then you forget about the second step. Okay, you just move on to the next business. Now, if that business model is good for that company, then you move on to the second step, study management. Now, business model is like a ship. Okay, a ship could be made of durable, made of good quality materials, and a ship could be durable, it's top class. But if the management sucks, Okay, management are like the captains of the ship. If the management sucks, they're lousy, they have no integrity, they have no management expertise, they don't know what they're doing, your ship will become Titanic eventually. Okay, so that's why second step is important. And third step is to study the price. If the business model is excellent, the management are credible, third step is you study the price. You study whether is it the right price to buy or not. What is the price now? What is the operating statistic? So you see the first step and second step is very common sense. Okay? It doesn't involve any number. It involves you to have common sense and maybe a fair bit of business acumen. The third step is very quantitative, where it involves you to have to be more number sensitive. So if you straight away jump to the price first, when you study the company, first step is you study the financial statements, the profitability. Chances are you may meet a company eventually like Enron. Okay, like Enron in the year 2001, they have an accounting fraud, right? So and then investors lose a lot of money overnight because the stock price crashed. So if you don't look at business model, you don't look at management, chances are you may meet a company that is run by crooks, okay, where try to siphon off the money from you when you don't know. They cook the book. Okay, they financially engineer the numbers so that it looks good to the shareholders. So today I want to suggest to you that studying the financial statements is never the first step. I want to encourage you to study the business model first. If the business is in a sunset industry, no matter how good, how attractive is the price, how attractive is the operating statistic, it will slowly go down. Okay, unless the management is credible and manage to turn it around. So yeah, you need to follow the steps that I share with you. Now, first step, study business model. So today I just want to briefly go through a case study, which is Tenaga Nasional Berhad. But in no way I recommend any buyer, all right? So today we'll take TNB because I choose this as a case study because everybody knows about this company. So it's easier for us to study. And we'll go through the three-step process to help us to understand how to use value investment in your investment. So, Tenaga Nasional Berhad. So, what is the first step? Study the business model. Okay. Now, if I may ask you, what does TNB do? TNB provides electricity. All right. So you can find out what they do on busanmarketplace.com and go to busanmalaysia.com and go to the TNB website. Okay. Now, here is written that TNB provides electricity generation, transmission, and distribution services in Malaysia. The company operates 6 thermal stations and 3 hydroelectric schemes, as well as manages and operates the national grid, which is connected to the Thailand transmission system, blah, 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 blah. Okay, but in general, they provide electricity to us. Okay, we know that. All right. So you can study a business model, go to tnb.com to mine and study what they do. Now, in studying a business model, maybe you should ask yourself, well, who are the customers? Okay, like almost everybody in Malaysia is a customer, right? Now, how likely will this company suffer from an economic downturn? Now, is economic crisis happen tomorrow? Will TNB go bankrupt? Or will TNB suffer a significant loss of revenue? I guess no, isn't it? Because whether tomorrow is economic crisis or not, everybody will use electricity. Okay, it's not like, oh, today economic crisis, okay, let's switch off the lights. It doesn't happen that way, right? If today is economic crisis, I cannot charge my phone. It's impossible, right? So you need to study. So, and what is the relative positions of TNB in the market? Okay, is TNB number 1, number 2, number 3, number 4? I guess is TMB is number one because they're monopoly, right? And you need to study whether they have a competitive advantage or not. And actually, the term is not competitive advantage. The term is sustainable competitive advantage. Sustainable competitive advantage. So let me ask you this: what is TMB sustainable competitive advantage? Of course, TMB most sustainable competitive advantage is the monopoly status. Okay. 20 years later, do you think they will still be monopoly? I guess it's yes lah. Right? My guess is yes. I think TMB will still be monopoly 20 years later because it is owned by the government. Okay, the biggest shareholder in TMB is Khazanah. Okay, it's a government-linked company. So based on my questions earlier, do you think they have a good business model? I think yes, because everybody is their customers. They have good customers. They are monopoly. There are no competitor in the market, and everybody has to use the product. The more population, the more advancements of technology, the more we need to charge, the more we need electricity, the more we use aircon, the more is the revenue. Okay, so I think if economic crisis happen, will they lose clients? No, I mean this is a defensive industry. Utility is a defensive industry. So to them this is fine. So to me their business model was okay. Okay, it's okay. Okay, if I invest in this company, at least I know it won't go bankrupt, and I have a safety of principle there. Okay, now if business model okay, let's go for the study of management. So study who are the board members. Okay, who are the shareholders. Okay, so in this case, you see that you can go to bursa-malaysia.com. You can check out who is the CEO, who is the CFO, who is the COO, and who is the board directors, who's the chairman, and stuff like that. This guy is Dato Sri Azman. Is the president and chief executive officer of Tenaga Nasional Berhad. So top 5 shareholders. Okay, Khazanah owns about 30%, and KWSP, PNB, and EPF. Now, in fact, if you don't know, I'm also a shareholder of TMB, but I don't own the share directly. I own through a fund. Okay, I buy through my insurance fund. Okay, so minority shareholder. All right, so you study who are the shareholders of the company and what are top buyers and top sellers of the company, and latest insider and individual holders. And now, is study insider important? Of course it's important. Okay, if the owners of the company keep buying the stocks, if the CEO, CFO, COO, CMO, CTO, CIO, all the management levels are buying the stocks aggressively, it is give you a very good signal, right, that something is right, because they are the first person who has the information, the first-hand information about the company. Okay, they know the company so well, and if they decide to buy the company, of course it gives you a hint that the company could be going into some kind of good deals in the future or in a short while. And if the management are selling the shares in the market, maybe CIO sell last week, and 2 weeks ago CEO sell, and this week you see CMO started selling, and then the next week maybe you see CFO unloading massively about the stock, and it also give you a bad signal. So studying insider is important. Studying management now. When studying management, it's important for you to look at whether they have management expertise or not. Do they know the industry well? Is the after they take over, when they manage the company, is the profit keeps increasing, or the profit growth is stagnant? Okay, and do they have integrity? Do they look after shareholders' interest? Do they look after minority shareholders' interest? Do they create wealth for shareholder? Okay, so this is a question you need to ask yourself. Some managements, they are crooks. Okay, they don't look after the they don't look after the shareholder interest so much. Okay, they look after their own pocket. So if the managements are crooks, chances are corruption can happen. So when corruption happens, whose money is that? It's the shareholders' money, you know. So when corruption happens, then shareholders could earn less, okay, or maybe invest in some kind of family-owned business. Okay, you know, in stock market there are there are a number of listed companies which majority shareholders are a family. So probably they are conglomerate. Okay, they are conglomerate, and there is one big company. There are multiple subsidiaries division. So maybe they share the same surname. So if you are, let's say if you head a company, would you likely to protect your family members' interest more or the shareholders' interest more? So when you make money, do you increase the pay of your management, or do you buy them cars as a capital expenditure, or do you give dividends? So these are things that you need to watch out when you study the management. Okay, and the easiest way to siphon the money out is through capex, capital expenditure, because it looks like it's investing, but actually they are increasing the welfare of the management. The CEO is the subsidiary, the managing director of the subsidiary, all of which are probably related relative. So when studying management, you need to study whether they have integrity or not, do they create wealth for shareholders or not, and do they have management expertise or not, do they know what they're doing. Okay. And lastly, if business model is okay, management is okay, go to the third step, study the price. If business model is not okay, if business model not okay, move on to the next company. If business model is okay, you don't trust the management, move on also. Okay. The easiest way to see whether the person is a crook or not is you go to AGM. You see the chairman, you see the CEO eyeball to eyeball, then you know whether, you know, some of us here have intuition. Do you agree? Sometimes we have sixth sense on a feeling. Okay, we look them in the eye and we know whether this guy can trust or not. If he doesn't have the face he can trust, then fire the company by selling the shares. Alright, so these are some considerations when it comes to studying management. And the third step is study the price. Okay, study the price. Now, because if the business is good, management is good, maybe it is expensive, so it is not a good buy for you. So in studying the price, we study the income statement, balance sheet, and cash flow statement. Okay, and let's briefly look at what it can do. Okay, an income statement is like a company's health. Okay, a company that have every quarter lose money is a company that is not healthy. It is an unhealthy company. Okay, a company that makes money is healthy company. Of course, when it comes to study the income, we prefer a company that has a profit growth and revenue growth, because every quarter they have revenue growth. It means that the share price is likely to appreciate. Okay, I have a higher earning per share, and then the share price is likely to appreciate. So important figure to look at is revenue, net profit, earning per share, and dividend. So these are things that are important to look at when it comes to income statement. So ideally look for companies where the profit keeps growing and revenue keeps growing. Now secondly is balance sheet. Okay, now balance sheet is like a company's wealth. If you study the balance sheet, it studies a company's wealth. So in the balance sheet, you can know how wealthy is the company, whether the company has more asset or liabilities, whether the company's how much equity the company has. So at a snapshot, you know whether this company can withstand financial crisis or not. So a balance sheet, a strong balance sheet will have low liabilities and high asset, and chances are when the economic crisis hits, the company will be able to survive the economic crisis. Okay, especially now when his stock market is at historical high, having a strong balance sheet is critical. Now, it needs you to have more investing skill. Okay, because compared to maybe 10 years ago when the market is at all-time low, you simply buy also. can make money. Now, stock picking is very important. Okay, stock picking is very important. Now, what are important figures when it comes to balance sheet? Now, balance sheet, I'll look at current asset, current liabilities, because I want to see I want to assess the what do you call that, the current ratio, and then I need to look at the total liabilities because I want to compare with the asset. I want to compare with the equity. I want to see the debt to equity ratio. I look at the total asset and the book value per share, and also net tangible asset per share. So these are some of the items I will look at. Okay. The third is study the cash flow. Okay. Now cash flow tells us the condition of the company. Now have you heard of cash is king? Now a company who have no cash is doomed for trouble. Okay, that's why study the cash flow is important. It shows that whether the company is in good condition or not. So cash is king, cash flow is queen. Okay, so when it comes to cash flow statement, important figures I look at is operation cash flow, whether the company has consistently and continuous positive operation cash flow or not, whether the company I look at ICF to see whether they invest in capex or not. I look at the financing cash flow to see whether they give dividend or not. And lastly, I look at free cash flow. The company with very limited free cash flow cannot do expansion and cannot give dividends. That's why free cash flow to me is very important. And when it comes to value investing, we have I have my certain criteria of what kind of profit growth we look at, what kind of free cash flow we look at, and what kind of balance, what kind of balance sheet we look at. So we have a certain criteria when it comes to that. So, but everybody's criteria is different. Of course, if you have your own way, you can set out your own criteria. So, and lastly, let's look at if you invest in TNB, how likely you can get the money back. Okay. Now, this is a TNB share price from 2007 until 2017. So this is about 10 years. The chart. Now, if you see the bell, this is the special events where they give bonus issue, rights issue, or the dividend. So this is the 10-year charts. Now, if you look at 2007, the TNB is probably trading at about near 10 ringgit. Okay, and in the 2007 until 2008. The market crashed because of subprime crisis. It crashed. Now let me ask you this: you see, in 2007, the stock price is about 10 ringgit, dropped all the way to 4 ringgit. So the low price is 4 ringgit 48. Okay, in 2008 or 2009. Okay, 4 ringgit 48. From 10 ringgit dropped to 4.48. So how big is the depreciation? It's 50%. Okay, from the trough to from the peak to the trough is 56%. Okay, let's say 55% drop. They plunged with 50%. If I may ask you, during the subprime crisis in 2007, does it have anything to do with TNB? No, right? So that's why I want to prove to you that the market is not logical. The market is emotional. Now, in this case, it has nothing to do with TNB because subprime prices come from the housing market collapse in the United States, and subsequently leads to the bankruptcy of Lehman Brothers, and a lot more of the financial institution got merged, and then Citibank got bailed out, and then it leads to a chain effect across the world. But let me ask you this: is TNB business dropped by 55%? From 2007 to 2008, 2009? I guess no, right? We are still using electricity, didn't we? So, but if you ask, is the business volume is the same, but the share price crash? What does it mean? It means that there's a great opportunity for you to make money in this wave. So during the next financial crisis, should you celebrate or should you be worried? Of course, if you have some holdings in the market, you should be worried. But if you are a value investor, you know how to capitalize on this. Okay, on this trend, you buy low, and eventually you can make money. Okay, so as I said earlier, value investor buy when people are fearful, they sell when people are greedy. So when it comes to investment, they are like go for shopping. Okay, it's like they go for shopping. They went in, when you go to shopping, you see today the shoe is the 200 ringgit, the next day the shoe is 150 ringgit, you buy, right? See, because the price is cheaper by 50 ringgit, you buy. So that's when it comes to investment. When it comes to shopping, okay, you buy when the shoe is cheap, it's selling at discount. So when you go to the stock market, most people aren't like that. So they go to the stock market, they say, oh, today the share price is 10 ringgit, tomorrow is 12 ringgit, I buy. It's more expensive already. Don't you think so? So I want to suggest to you, when you go to stock market, you should employ the same mentality like you go shopping. Okay, you buy when things are cheap, when discount. During financial crisis, mega sale. Every asset is so cheap. Okay, everywhere you see, it's like you go to shopping mall, Prada 70% off, Gucci 70% off, the other luxury brand 80% discount. When it's financial crisis, everything is selling, every security is selling at discount, because the market is emotional. They whack the price down. Okay, usually the bear cycle is very short. Okay, 1 to 2 years, because people sell very fast. Okay, but the bull market is longer. Okay, because it climbs slowly up. So during that period, you can pick up a lot of cheap stocks. Okay, and you can make money. And a lot of people makes millions during this subprime crisis, when the market recover eventually. So if you've studied, now I actually didn't invest in TMB when I was 2008, because I was just studying how to invest in stock market during that time, 2008. So I missed that chance. So, but when I studied back, I realized that a TMB, the net tangible asset per share is 6 over ringgit. Okay, 6 over ringgit. In other words, what is net tangible asset per share? Okay, net asset per share means that the net asset means the asset minus the liability. The net asset is divided by per share level. There's a net asset per share. Okay, net tangible asset per share means that you get a net asset minus the intangible assets, such as brand goodwill, such as the branding, intellectual properties, and then there's a net tangible asset. So at that time, the TMB net tangible asset during subprime crisis is about 6 ringgit, 6 over ringgit. Okay, in other words, if TMB went bankrupt in 2008, if TMB went bankrupt in 2008, so not bankrupt, sorry, I shouldn't use the word bankrupt. If TMB closed the business, okay, they decided not to operate TMB anymore. They close the business, they sell the assets, get the money, pay back the liabilities. Every shareholder will take back 6 ringgit, 6 over ringgit. Okay, that's what NTA means. When they decide to close the business, they sell the asset to pay back the liability. The balance cash they give back the shareholders. Every shareholder will take back 6 over ringgit. So that's what NTA means. So during financial crisis, the share price, the lowest is as low as 4 ringgit and 48 cents. Okay, 4 ringgit 48 cents. Now, if you know that the TMB net tangible asset is 6 over ringgit, if the price is at 6 ringgit, it's already a good buy. It's super good buy already. It's hard in the market today. It's hardly find any share price trade below the net tangible asset per share. It's very hard, because most price will trade about 1 to 3 times the book value. Okay, you won't find it's very hard for you to find a stock that trade below the book value, let alone the net tangible asset per share. Okay, at that point, TMB share price is below the net tangible asset per share, which is a very good buy, because if they close the business, everybody will take back 6 ringgit, you know. So you buy the stock at below 6 ringgit, that's a good buy. So let's assume you buy at 6 ringgit. Okay, if you are a value investor, you know how to see the opportunity. So let's assume you buy at 6 ringgit and you hold it until today, which is 14 ringgit 18 cents, the closing price today. That is a capital gain of 136%. So you double your money in about 8 years period. Okay, more than double the money in 8 years period. You probably double your money in 5 years period. Okay, in 2014 you already double your money. okay? But we are simulating a buy and hold strategy, okay? If you buy and hold, on average, your annualized return is 11%, 11.35%. The total dividend you receive is 11 times. You have received 11 times dividend, up to 1.62 ringgit per share. So your total dividend yield is 27%. Okay, so you include dividend yield, your total annualized return is 12.85%. Now, had you sold the shares in 2014, when TMB's shares start to go sideways from 2014 to 2017, had you sold the share in 2014, 2015, that period, your annualized return would be 16%. Okay, because over 6 years period. So this is the magic of value investment. Okay, you invest in a safe company that you know will do well and can give you adequate return over a period of time. And that's just purely using buy and hold strategy. Okay, at the stocks that is widely known. Now, I'm not suggesting you to buy TMB now. Now, if you ask me, I think I wouldn't buy TMB now, because even though they have good business model, but usually the GLC company is not managed effectively. GLC company, their growth is not so high. And if you want to invest in utility stock, TMB is a safe stock. The company won't go bankrupt, but the dividend yield is not super attractive yet compared to other utility stock in ASEAN region, like in Hong Kong and stuff like that. So the yield is not so attractive. To me, the yield is not so attractive. But TMB is everybody know. So if you just buy into a company that everybody knows at a really cheap price using value investing approach, you can easily make 11 to 12% return per year. But what if you learn to uncover the growth stock? Okay, you learn to uncover the mid cap and small cap stock, which has even higher potential growth and can also give you a certainty of safety of principle. Your return could be 20% per annum. Okay, so yeah, not to mention that you also have a bonus issue 1 for 4 in about 2010 period, okay, or 2011 period. So this is a wonder of value investment. So why value investing? Firstly, can help you make money. Okay, in trading, sometimes you're up 20%, the next month you're down 10%, the next one you're up 5%, the next one you're down 8%. So probably it is not so consistent. Okay, but in value investing is consistent. Okay, it is more predictable and you can make money. So if you look at the world's greatest investors, they are value investors. So it's no question whether value investing can make money or not. Secondly is time. Okay, it helps you to save time. So like if you do trading, it's very time consuming. You need to look at the market. You need to be very kanjiong, okay, very nervous looking at the market. And in value investing, it saves your time. Okay, you buy, and then you can don't watch the market for a half year, as long as things are good. Third is it gives you a peace of mind. Okay, you can sleep soundly and nicely at night. Okay, you don't have to worry so much about the stock. If you buy into a leverage product, you need to worry, don't know whether I will got margin call or not. Okay, whether you hit my stop loss or not. So in value investing, you have a peace of mind. Okay, you can sleep soundly and nicely at night, and without other worries. Okay, so this is why I strongly believe in value investing. Most of my portfolio is I do value investing in a growth company. So that is my style. Because growth company is I can grow faster. I'm young, I have capacity to take risks. Now of course, if you don't have so much capacity to take risks, you can also do value investing at a big cap stock, at blue chip stocks, at dividend stocks. If you do value investing in dividend stocks, you know when to buy. Your dividend yield will be higher than the average people. That's why value investing is so cool. So to value investors, we are very happy. You know why? Because in downtrend, we are very happy because we can go shopping. Okay, we back up the truck at the companies that we want to buy. Some company I see now is fairly valued, fully valued. I don't buy, so I wait. I patient and wait. I have a bit more stock picking skill and go and cover better company which we are undervalued. Now, let me clarify. In value investing, it's not about buying cheap company. It's about buying undervalued company, because cheap companies can go cheaper. There's a huge distinction between cheap and undervalued. So in value investment, we look at undervalued company. Undervalued is definitely cheap in comparison. Okay, cheap in comparison to the value, but cheap company may not be undervalued. So during a downtrend, value investor will be very happy because we can go shopping, we back up a truck, we buy a lot of stocks, we buy a lot of assets at really cheap price at 50% discount. So we're very happy. So what do value investor do in an uptrend? We chill and make money. Okay, during downtrend we buy stocks, we go shopping. During uptrend we are happy because we make money. Okay, so what happened in sideways? We are also happy, okay, because we collect dividends. Okay, so value investors are happy people. Downtrend we buy stock, uptrend we make money, goes sideways we collect dividend. So isn't that fun to be a value investor? Now look at the world's most successful value investor. So look at the picture, at their face. Do they look very happy? Of course they look very happy, okay? So you see Warren Buffett is like 87 years old. Charlie Munger is 93 years old. Irving Khan is the longest lived value investor, okay? He died at about 109 years old. So the world's most successful value investor, they are happy people, they live very long. Value investors tend to live very long, okay? Peter Lynch is also 70 years already. So the world's most successful value investor, they are happy, they live very long. Look at Warren Buffett. He drinks Cokes every single day, okay? He eats McDonald's every single day because he owns 2 of these companies. So he eats McDonald's every single day, he drinks Cokes every single day. He has high dose of sugar, and then he eats not so healthy food, McDonald's, and he is still alive. Why? Because they have a peace of mind. They have no stress, not so much stress, because unlike traders which are very bothered by the day-to-day fluctuation of the stock price, value investor has peace of mind. Okay, they tend to live very long. That's why today I want to suggest you to become a value investor. Okay. Now, how can we support you further? How can we support you further? Now, just now I spent probably an hour and 15 minutes to tell you about the why invest, why stock investment, and the principle of value investing. Now, just now you have learned a couple of principles, and if you go back, apply this principle, maybe it can help you a bit more. Now, but if you want to improve your financial results further, the question now is how can we support you further? Now, today I actually have a program that I want to introduce to you. Okay, I want to urge you to attend our value investment program because I believe that I can help you to improve your financial results in the market. Okay. Now, this is only for people who are serious only. Okay, for people who are serious, you are very committed to improving your financial well-being, and you don't know how to invest in stock markets, and you want to learn from us. That's where I want to urge you to attend our Value Investment Maven program. Now, as the name suggests, we want to teach you to become a maven. Okay, maven is like an expert in value investment. Okay, so next time we can speak the same language, and then you know how to pick up undervalued stocks in the stock market. Now, the principle is applicable. Okay, we teach you a set of principles you can apply in any market. Okay, of course, in different markets you have to tweak a bit, but the principle is the same. You can use it in the Hong Kong Stock Exchange, London Stock Exchange, New York Stock Exchange, or even Kuala Lumpur Stock Exchange. Okay, so this Value Investment Maven is a program that I spent a lot of time to design, and then we will cover a number of modules, and it's a one-day program. So to teach you to become a value investor. So program details is we will do it on 16 September, which is Malaysia Day. I guess most of you are off work, so it's 9 to 6 o'clock. Venue is tentatively at KL Gateway. All right, it's tentatively at KL Gateway. So it's our value investment program, 16 September. So which is 3 months from now. So if the date is not suitable for me, can I attend the next program? These are some frequently asked questions. Now, we don't only do it for one time, but we do it for probably a few more times. If the date is not suitable for you, we can schedule you for the next intake. We can schedule you for next intake. So time is not a concern. But of course, the first time we run this program, we'll do it at really low price. So today is the best time for you to enroll because the price is really low. If you schedule for the next one, for those who didn't sign up today, maybe the next one will be more expensive. So the next intake will be more expensive as long as you sign up today. So, and the time is never an issue. Now, I believe that successful investor need three things. The first thing is you need to have a strong state of mind, which is very important. The secondly is you need to have good money management skill. The third is you need to know what is the strategies. So, and if you are in the intersection of these three circles, you would really be a disciplined people. So that's why in our program we cover a few modules. Module 1, which probably will spend about an hour to talk about the basic to stock market. Maybe usually when I run class, there are half of you are quite new, so you don't know what is stock market. So I will cover to you what is stock market basics, what time market open, where you can buy, which broker, and then what is the tick size, what is the Bursa settlements, what is the contract note, what is the brokerage fee, and how to calculate those things. These are basic stuff. And then we talk about what is different sectors, talk about different sector, different outlook, and then ultimately talk about what is the 6 classification of stocks and the basic strategy to trade these different classification of stocks. Okay, this is probably an hour or so. Second module is where we will spend most of the time in. Okay, probably half of the day will be on value investing. So we'll learn the in-depth process of value investment. Okay, we will learn how to dissect the 3 financial statements to the bone. So after you've learned this module, you know how to interpret the financial ratio. You know what is the KPI to look at. Above which level is considered dangerous. What ratio above which level is okay. What is the criteria we look at? You learn our KPI and value investing and explore case study using our strategies. So after you learn value investing, after you learn this module, you would be an investor. You can interpret financial statements well. You know the next time when people talk this term to you, you understand what it means. You know what is net tangible asset per share. You know how to calculate the book value per share. You know how to assess and see whether the company is attractive or not. So this is module 2. So after this module, you will be very number expert. Okay. Module 3 is where we'll probably spend 1 hour, and module 4 will probably spend also an hour. So this is where we talk about psychology. Now, psychology is very hard to train. I can teach you, but I can't train you. So this depends. I will set out a few principles on how you can control your state of mind, and this needs you to have discipline. Okay. And 4th module is money management, where we talk about some rules when it comes to money management, and you learn about portfolio management. You learn when to average down, when to not average down. So these are the tricks that and the skills that we will teach. Okay, in the 1-day program. It's a very intensive 1-day program, and ultimately at the end of the day, I will do a bonus session to talk about market outlook. So if you want to hear about market outlook, you can stay back until about 7 o'clock or so. So this is about the module we will cover. 1-day program. So I'm very fortunate I have students who have attended the program and give me great testimonial because they have achieved results. So I will just show you a couple of students because Fen consistently tell me that I only have 1.5 hours, I can't talk too much. So Kobe attended my program. He said the programs are well structured and easy to follow even to a beginner like her. Okay, so thank you so much, Shane. Chongshen, who is a pharmacist, he attended our program and he started with 2,000, and recently he made about 30% realized profit. Okay, I think he gave me this testimonial like a year or 2 ago, so now maybe he makes even more. So we also have Charlotte Chiu. She's from Kedah. So she attended a workshop, and she said that attending the workshop was the best decision. She was able to meet and network with like-minded investors, and most importantly, the workshop has helped her to clear a lot her doubts and question about investment. So even students attend my programs. Okay, so let me ask you this: how much does a normal stock investment program cost? Probably if you are attended some kind of preview before, it will cost you 5,000-6,000. I think in the market, their stock program will cost you 8,000. The stock program will cost you 6,000. The stock program will cost you 5,000. But if you want me to talk about average, the average is about 3,997. Okay, average stock investment program is about 3,997. But some are 2 days, some are 3 days. So let's say a 3 days stock investment program, 3,997 divided by 3 is also 1,000 plus. So on 1 day, easily is 1,000 plus ringgit. Okay, for stock investment program. For me, I price it at 1,280. Okay, because the number looks auspicious. Okay, okay, it looks auspicious. So I price at 1,280 ringgit. But I bet you today that some of you here are expecting me to give some deals. Of course, I'm willing to give you some discount with one condition. Okay, the condition is if I'm able to help you to produce results, you must give me a good testimonial. All right, like the students gave me just now. Okay, I can give you a cheaper rate if you can give when I help you to produce results. You must give me a testimonial. Is that a deal? All right, awesome. So for today and today only, Mastery Asia and I have agreed to lower the price from 1,280 ringgit to a freaking 280 ringgit only for a 1 day program. It is the cheapest program that I've ever run. Okay, when I do program for corporate, I charge about 1,000 ringgit per hour. When investment banks engage me to speak, to train, I charge about 1,000 ringgit per hour. When I run other program I sell is 1,490, 1,990, 2,250. So these are the program that I sell. It's the first time that I'm convinced to run this program at such a low price for Mastery Asia. So if you are tuning in today, I encourage you to take action. 280 ringgit for a 1 day program to learn the solid skills from me is really, really very worthwhile. So 280, and for today only must enroll by 11:59. Register today at this link. So I think in a short while my colleague will send you the link in the chat room. So you just click at the link. If not, you just remember goo.gl/CJEFXN. Okay, otherwise I can share it with you later as well. So it's today and today only. By 11:59 you have to take advantage of this offer. Okay, 280 ringgit for 1 day value investment Maven program. 1 day class to teach you about how to become value investor. It's really attractive. Now let me ask you this: if you don't, either way, I believe that you gotta for investor, we will burn some money in the market. If you don't learn the proper skill, the chances for you to lose money in the market is very high. If you don't learn anything, when you go to the market, it's very high that you will lose money. You will burn your money, and sometimes you burn even more. Now, by investing 280 ringgit, you get somebody who has some experience, who have decent amount of experience to guide you, to become a mentor, to guide you towards the proper investing. Okay, to help you to propel your journey forward towards becoming a better investor. So we can share with you some blind spot, some of the mistake we share, so you don't make this mistake. If you don't learn proper way, you go to the market, you will lose money. If you invest a small amount of money into learning from somebody who has experience, learning from mentor, then it can help you avoid all the kind of mistakes, and you can save a lot of money. So either way, you could spend some money. Why not learn from somebody who can guide you, who can help you, who can bring you to a greater height in your financial journey? So instead of burning a lot of money, invest a little money to learn from people who are good. It may not be me today if you decide not to join our program, but if you have a bit of faith in us, and then we can definitely help you to achieve financial success. And of course, you can also join our investing community. Now, when it comes to investment, investing alone is very lonely. I really encourage you to join a community, because when you join a community, we can guide you, we can support you, we can share with you some kind of updates, we can share with you stocks that we're looking at, so it helps you to multiply your time, okay? Help you to save time, and that support group. When you have any problem, your peers will help you. You have any clarification, the teachers will help you as well. So join an investing community, not to trade alone, not to invest alone. And of course, selling at so cheap price, 280. Mastery Asia staff also asked me to give you some bonus. Okay, so I think they are very. I think most retail investors are very conditioned, okay, to bonus. No bonus, they say not compelled to take action. So they have convinced me to give you some bonus, but it's only for people who sign up today only. So for the bonus, what we'll give you today is we'll give you 13 online lessons. It's a webinar lessons that I've done for my clients before. So in these 13 online lessons, we'll discuss about understanding market indices and sector. We'll cover basic technical analysis, some basic for you to know how to look at charts, how to choose the right investing strategies. If you want to invest in real estate investment trust, we have one module on real estate investment trust. We also cover master financial statements. We talk about master financial ratio. This tool is from the other speaker, so he will share with you his criteria, which is actually to me is it is quite close. Okay, introduction to candlestick, how to invest in growth stock, how to identify growth stock, how to invest in cyclical stock, how to invest in value stock, how to invest in turnaround stock, how to identify a sunset stock, and uncover the myth of oil and gas industry. So these 13 online lessons, each is 90 minutes long, some are 2 hours long. So for this, really valuable. So these are some of the programs that I do for my clients, and then I bundle it and then I give it to you as a bonus. Okay. Some of each is taught by me, some of it is taught by my trainers. Okay, I engage other trainers to do work before. So we will give you a bonus, and it's only for the first 10 persons who sign up today. Okay, if you are late, then maybe they won't extend it to you. So the first 10 persons who sign up today, you're entitled to this bonus. So in the summary, our program, we cover a one-day program which I price at 1280. Facebook community, I don't know how to price it, so I put dash here. And bonus is 13 webinar lessons, 1,003. I price at 100 ringgit only per webinar, and then it's 1,003, and altogether 2,580. For today and today only, we are giving you this pack at 280 ringgit. You must sign up today and clear a payment by 11:59 p.m. tonight. So you have about 2 hours or more to do this. Now, if you don't spend this money, where would they have spent it? Okay, you could have spent it in shoes. Okay, you could have spent it in clothes. Okay, in other items. And I want you to compare it with the money and a skill that can fit your lifetime. Now, learning and investing skill can fit your lifetime. You will invest it 280 to learn the skill that can help you every month, give you a dividend. Okay, every quarter give you a pair of shoes. Okay, invest 280 every quarter, you have 280 in terms of dividend, 280 in terms of dividend. So in 1 year you can have four more pairs of shoes. So of course, if you don't invest today, chances are your financial result will remain stagnant. So I seriously encourage you and urge you to attend, because I believe that we can help you to propel your journey forward to become a better investor. And unlike investment in other asset classes, it only gives you finite return. Investment in your brain, in your education, will give you infinite return. It can help you to generate multiple folds of cash and cash flow to you subsequently. So to me, the best investment is not in asset, but is in your education, in your brain. So I strongly encourage you to join us. Now, this is my last slide. I believe that action is the foundational key to all success. And knowing alone is not enough. You must take action. So, it's in is in the matter of decisions that your destiny is shaped. So today I urge you to take actions, to take massive actions out of stuff I shared. Maybe you know, but it is whether you take action or not to help you, to lift you, elevate you to another level of your financial success. So I hope that you would believe in us and join us in our program, and where we can, I'm very sure we can help you to achieve your financial success. So register today at http goo.gl/CJEFXN today. And thank you very much. It has been a pleasant. If there's any questions, so let me see if you can see any questions. Okay.
Okay, thank you, Jun Sen. Jun Sen, can you hear me?
Yeah, I can hear you.
Yeah, I can ask can you see the questions that are coming in, or you want me to read it for you?
I don't know, let me check. I see. Yeah, I can see the questions. Okay, I see the question. So
some have
no worries, I can take the question.
Yeah, some of them have been answered by Fen. So if you want to add on, you can always add on. And I have also added drop the link, the registration link in the chat box. What you need to do, you just need to click on the link and click on the enroll button. All right, back to you, Jun Sen.
Okay, sure. Now, let me see. Let me sing through some. Just say hi. You know, how are you? And then no sound. Okay.
Yeah, I think there's the last three one you can answer by Ben Hugh. Talks about the webinar lessons.
Okay. So one person asked me, so your module topic can be picked up in books. What is the difference? So the difference is, you know, we can share through some life experience. Okay, in books maybe you can't share so much about life experience. Maybe you can't get the so much about what to avoid, and then case study. So in this case, I think the difference is in our experience. Okay, of course, if you believe that reading a book is better, again, why not? Go ahead. Also, the course is held. Where is the course? The course is held in tentatively in KL Gateway, which is somewhere near Bangsar South. Okay, along the Federal Highway. Okay. Okay. May I know if I get the bonus instantly after sign up, or do I get access to it after the workshop in September? The bonus will be extended to you after the workshop in September. Okay, the bonus will be extended to you after the workshop in September. Okay. Or may I know how many participants per workshop? Okay, for us, we are limiting it to 100. I think Mastery Asia limit to 100. Okay, 100 participants per workshop. Otherwise, we can't spend too much effort on every student's progress. So, question is, can I bank in tomorrow? This one I need to check with Mastery Asia staff. Can Mastery Asia staff answer this question? Can I bank in tomorrow?
And IVLib is our member, so I will give Ivy a call and see how to help. Right now also could be quite late do that. If you don't have if you have PayPal, then that will be best But I will let me call Ivy. Ivy, you just sign up first and then do an arrangement with you.
Okay. Okay, no problem. So of course, the bonus is extended to the first 10% only, so you take advantage of that. So next question is, will this course benefit people from Singapore? If so, will the community cover Singapore stock? Now, the stock that we'll cover in our program is only a local stock. Okay, but the principle can apply. The principle can apply in Singapore stock, and as well as US stocks. Okay, but of course US stock, of course the P ratio you look at is different. In America the P ratio is very high, so of course there's a certain adjustment to some of the criteria. So in the program I won't cover the Singapore stock. I will use local stock as an example. How do I know if I'm the first 10 person who sign up? Okay, this one is Mastery Asia would tell you whether you're a first 10 person to sign up.
Yeah, don't worry, Roger. Right. You will have all the record, see who is coming, all these things. Yeah. And Zizan, can you show the last slide again so that they can see the link where if they wanted to type.
Okay.
Yeah, just full
Now this is the last slide.
Yeah. So any other questions? Yeah, we have more questions coming in.
Yeah. Okay. I guess there's no more questions now. I see that how many people have signed up so far. This one maybe a Master Asia people can answer. We can only accept 100 people per workshop maximum. Then other than that, we can schedule for next class. And the next class is we are likely to increase the price. So if you want to do it, you don't delay, sign up now, because this is the first time that I do this program with Mastery Asia. So first time we roll out, the Mastery Asia team wants to price it really low. So that's why we charge it at really, brainless kind of price. Okay, 280 only. Okay, this is really the lowest price I've ever done. So yeah, for those of you who want to take advantage, please sign up today, and then we will welcome to the cloud, and we can help you to achieve financial success. So if there's no more questions, then we can call it a day. Yeah, so I guess no other questions coming in. So Alex?
Yes.
Over to you.
So, all right. So guys, thank you so much for spending this evening with us, and Chun Xian about sharing with you a little bit more about stocks investment. Now, this is the first time we are running it. So the subsequent workshop that we are running we are going to charge higher. So this one is the first round, and we want to benefit to the action takers to take this advantage for the live one-day training, and of course with all the 13 bonuses that Chun Xian going to share with you after the workshop, which is the live recording. It's a pre-recorded webinars, and you can watch it over and over and over again to help you to benefit and profit from the stock market after the workshop. Right? So I'm going to just leave this webinar on for another 1 minute, and then we will end the webinar, so that if you have more questions, our support team is here for you to answer any questions that you might have. All right, so thank you very much, and let us know what you think about this webinar, and just drop us a comment box here, and we appreciate your feedback and your opinion, and we will always strive to do better. All right, so Chun Xian, thank you very much for your time.
Yeah. Okay, thank you very much, guys. I hope that I made a difference in your life by sharing with you some ideas in investing. Thank you very much, and have a pleasant evening.